I've had the privilege to work at our family business, Hoffman Media, and be a part of an incredible growth story. As I strategize about both our company's continued growth as well as small business growth throughout the United States, I'm concerned by recent changes in financial regulation, healthcare, and taxes. In this testimony, I will share with you the history of Hoffman Media, concerns I have on the Volcker Rule and long-term negative effects on small business and growth, and concerns of future burdens caused by healthcare reform and higher taxes. Overall, I'm concerned that the significant changes we are seeing will hurt our future ability to grow, as uncertainty is the worst headwind we face. I remember Obama said last night that we can do big things. It's possible to do big things, but uncertainty prevents that. Hoffman Media was founded in 1998 by my mother, Phyllis Hoffman, who currently serves as chairman and CEO. After successfully working for 5 years at a large publicly traded publishing company, she left the business. She acquired 2 magazines and financed the startup by mortgaging her house, true sign of an entrepreneur. From 1998 to 2003, the company ran on an extremely tight budget, whereby all operating profits were reinvested into the business to fund continued growth through the launching of new magazine brands. In 2003, the company had approximately 20 employees and generated approximately $4 million of sales. It was during this period that Phyllis decided, in order to properly fund growth and scale the company both through organic growth and acquisition, that Hoffman Media would need to raise capital. Since Hoffman Media was not producing net income, it prevented the company from accessing traditional commercial lending from a bank. And after a 24-month search, interviewing private equity funds, Hoffman Media successfully raised $5 million from BIA Digital Partners and Frontier Capital. This capital raise allowed Hoffman Media to complete a strategic acquisition of a complementary business and fund additional marketing and hiring needs. From the period of 2004 to 2010, the company has scaled, growing revenue from approximately $10 million to $40 million, while also growing our employee count from 20 to 135. The capital raise is worth explaining further. BIA Digital Partners provided mezzanine debt with warrants to the company, which Hoffman Media successfully paid back in 2009. The outcome was a win for all parties involved. It was a win for Hoffman Media, it was a win for the private equity firm, and it was a win for their LPs. I want to point out that half of the fund's LPs are banks, large national banks, some of the best institutions in this land. And I'll go as far as saying that Hoffman Media would not be where we are today had it not been from the support of both BIA and also their LP support, which included banks. The Volcker Rules proposed a limitation on banks being owners in or holding equity in hedge funds and private equity firms concerns me, in that if it's done away with altogether, or it's limited to roughly 3% of Tier 1 capital, which I believe is proposed, I fear this could lead to a substantial decrease in the funding that supports private equity, in particular those covering the lower middle market. If the pie gets smaller and banks can only invest a small portion of their capital, my fear is that if there's any to go anywhere, it'll reach the larger buyout funds and not the lower middle market. The total economics of those relationships with the larger buyout funds are obviously more important. However, the value created in larger private equity is generally done through leverage, dividending out excess cash, cutting costs, taking companies private, and then returning them to the public market later. It's business like Hoffman Media that can obviously show that a private equity investment works. It works for us. We've grown a real sustainable business. We're now producing substantial sales tax that impacts the local sales levels. We generate taxable income. We have 135 people that are impacting our local economy every day by paying their mortgages, buying groceries, etc. My biggest concern is that if companies like Hoffman Media have additional hurdles that are put in place to prevent us to grow, then it's going to slow down this economic recovery. I have no doubt. This recovery will come from small business, and it's businesses like ours. When you have entrepreneurs that take risks, go after their dreams, and then when they scale and need that capital, if they can't get it from a traditional bank, which is incredibly difficult to do, we've tried, and it took us years to finally work with a traditional bank, it will have big negative impact on the recovery. In passing, I will say healthcare reform and higher taxes are also hurdles that could potentially slow down the economy. I know that as we produce profits, if that cost of our profit goes up, by tax rates, or our cost of operating goes up with healthcare costs, that directly steals money off the bottom line. And one of the congressmen earlier said that millionaires don't produce jobs. You know, the fact of the matter is, if a millionaire is given another $1 million, they reinvest it. They don't put it in their pocket. And we're an example of that. So in closing, I believe that the story of Hoffman Media is compelling. I urge the members of Congress to pay close attention to our story, because there's thousands of companies just like Hoffman Media out there. We don't want to put limitations on our banks. The fact of the matter is, if they want to invest in smaller private equity firms or large buyout funds, it's their choosing. But let's not limit the capital that's flowing down to the lower middle market, because that is where a significant amount of jobs will be created. Thank you very much.